Greeks now. Okay. So again, see, a lot of people overcomplicate Greeks. Okay. A lot of people, I would say have, they sometimes they end up giving a lot of importance to it, and sometimes, they over rely on Greeks. Okay. I'll tell you one thing. It's been almost 3 years for me trading in F&O RAM. Okay. And I am a person who hardly uses Greeks. Okay. When I started out F&O, I used to think that, Greeks matter a lot. And Greeks is something, that is something you cannot trade without. Okay. But as deep as you go into it, right, you'll understand that Greeks is just 10% of your analysis. Okay. Whereas people think that option chain, OI data, Greeks, and all these things actually consist up to 80% of F&O, which is not correct. Okay. One thing that I can tell you is that Greeks, option chain analysis, OI analysis, all three combined only consist of 30 to 40% of your entire analysis. Okay. Rest 60 to 70% is technicals. Okay. This 30 to 40% will only help you determine the strike price, can help you mainly strike price, that is it. Okay. Or it can help you determine the risk that is involved in your trade. Okay. Can help you determine that how much profit can be made in the upcoming period, or how much loss am I exposed to, that is again risk, or how much loss I can actually make in a day or two. Okay. That is all it helps in. A lot of people have this misconception that Greeks or option chain or OI can help you taking entry. No. Okay, don't have this misconception. Your entry, what can get you your entry is either technicals or fundamentals. Okay, all these things, option chain, OI, Greeks will not help you take the entry. So don't have this thing in your mind. A lot of people have this misconception that if I don't know this, I cannot trade. Okay, first thing, you can still trade, but you can obviously, improve your position a little better with Greeks, OI, and option chain. Okay, but don't over rely on it, because one thing is that they won't help you take the entries. So first thing what I would suggest is get better in technicals, get better in what will help you to take the entry. Okay, all these things will only help you to select the strike price, maybe sometimes take a exit. Okay, but they will not help you to take an entry. Okay, so always remember this. Okay, fine. So the very first Greek that is there are four. First is delta. Okay, delta is nothing but how much your premium will move with respect to move in the underlying asset. Okay, just to tell it in very simple terms, for example, if Nifty goes up by 1 rupee, okay, if Nifty goes up by 1 point, how much will the premium change? Simple. Okay, what is the definition of delta? The rate of change of premium with respect to the change in the underlying asset. Okay, that is a bookish definition if you want to write. Simple terms, if Nifty goes up, not only Nifty, if any underlying asset goes up by 1 rupee or 1 point, how much will the premium move? That is delta. Okay. Now delta can be negative as well. For puts, it will be negative. For calls, it will be positive. Okay. So here it will be 0 to 0.99, 0.01 to 0.99, and here it will be negative. Okay. Minus 0.01 to minus 0.99. Okay. Don't think that minus. So just a second यार, यहाँ पे इसको माइनस करके प्लस मत कर देना. Okay. This is not minus, this is like the range basically. Okay. 0.01 to 0.99 minus 0.01 to minus 0.99. Okay, this is the range of delta. Okay. Now, a certain range that different moneyness will have, I'll give you that. Okay, see your at the money, that is strike prices, okay, will have a delta in a range of 0.45 to 0.55. Okay, it can be a few points above or below as well, that is fine, but this is an approximate range for at the money strike prices. Okay, for in the money strike prices, it will be close to 0.99. Okay, so you can write maybe 0.8 to 0.99. Okay, and for out the money, it will be 0.2 to 0.01. Okay, now see, let's say for example, I want to clear out this thing. Let's say spot is 17,200. Okay, this is your spot. Okay, so you know your at the money is 17,200 call. Okay, this is your at the money. Okay, now you know your in the money is 16,500 call. Okay, you know your out the money is 17,700 call. Okay, this is your out the money, this is your in the money. Okay, now is there a certain name that I can give to, for example, 16,900 call? I know 16,900 call is in the money. Okay, but since it is not very far in the money, see, this is far in the money, right? So there's a certain term that you would have heard here or there, that is slight in the money. Okay, so 16,900 will be called slight in the money, and this 16,500 call that is very far away from the spot and at the money, this will be called deep ITM, or you can also say far ITM. Okay, similarly, this OTM will be called deep OTM or far OTM, and OTM close to at the money, let's say 17,400 call, will be called as slight OTM. Okay, so I'll be using these terms, so don't get confused. Okay, I'll be using these terms: slight OTM, far OTM, slight ITM, far ITM. Okay, so don't get confused. Okay. Slight ITM means not very far away, simple as that. Okay. Okay, so this is the range for calls. For puts, it will just be negative. Okay, so you can just add a minus ahead of it. Okay, now let's say for example, okay, let's say your spot is 17,250, and let's say your strike price that I'm talking about is, let's say, 17,200 call. Okay, which has a premium of right now 70. Okay, and the delta of the strike price, okay, is, let's say, 0.6, for example. Okay, spot is 17,250, strike is 17,200, premium is 70, delta is 0.6. Okay, now let's say the spot goes from 17,250 to 17,350. Okay, spot has gone from 17,250 to 17,350. Okay, my question to you is that, listen to it very carefully. Okay, my question to you is that, considering everything else constant, okay, considering everything else constant, what would be the premium when your spot goes from 17,250 to 17,350? $130. How it is 112? I don't get it. It will be 130. Okay, I'll tell you how. Okay, see, delta is 0.6. That means 1 point change will bring a 0.6 point change in the premium. Correct? Nifty goes from 17,250 to 17,251. This premium will go from 70 to 70.6. Okay, it goes from 17,250 to 17,350. That's a 100-point change, which will bring a 0.6 into 100 is how much? 60. So a 60-point change in the premium. So 70 plus 60 is equal to 130. Okay. But will it happen like this? It will not. Okay. The market actually, it will reach to 17,350, your premium can or cannot be 130. Okay, there is no definite chance that it will be 130 for sure. The reason being that the movement of the underlying asset is not the only feature or is not the only thing that is affecting the premium. Okay, see, what will affect the premium is also that how much time it is taking. Okay, how fast it is going, how much time it is taking, what is the volatility at that point of time. So all these factors also affect the premium. Okay, so automatically, it might or might not be 130. Okay, so you need to understand that. So, and logically, actually, this is not possible as well, because 17200C will automatically have 150 as the intrinsic value. Okay, so 130 is not possible at all. That is one thing. Another thing. Okay, so this thing won't actually happen, but I have just taken this example just to make you understand exactly how delta works. Okay, this is just to make you understand how delta works, but actually this is not how it will happen. Premium might or might not be 130, because delta is not the only factor that is affecting the premium. Volatility is also affecting the premium. Time is also affecting the premium. Okay, that how much time it takes to reach 17350, how fast it reaches 17350. These factors will also affect the premium. Okay, not only the change in the underlying asset is not the only factor that is affecting the premium. So because of this, it might or might not be exactly in this way. Okay, because there are other Greeks as well. Simple. Okay. Okay. Now just to show you delta, here is your delta. Okay, so here, as you can see, this is your at the money strike price. Okay, and your delta here is 0.52. Here your delta is minus 0.48. Okay, you can see your put deltas are in negative, your call deltas are in positive. Okay, as you keep going in the money, your deltas will keep on increasing. As you keep going out the money, your deltas will keep on decreasing. Okay, so for example, for 17500 call, the delta is 0.17. Okay, so a 1 point change in Nifty will approximately bring a 0.17 change in the premium. Okay, so 30.95 can go only, or approximately it can go till 31.12. Okay, so if you remember in the beginning I said, right, that change in the underlying asset won't bring the same change in the premiums of all the strike price. It will differ. It will differ. Why? Because of delta. Okay, so if you go very deep in the money, right, something like you can, if you go 16,000 call, here you can see the delta is 0.99. Correct? Here you can see the delta is 0.99. So this becomes equal to your future. Okay, see what is future? Future has a delta of 1. Okay, 1 point change in Nifty will bring a 1 point change in the future of the Nifty. Okay, so this option that is there, 16,000 call if you buy, if you're bullish, that is equal to future. Because this will also bring, what will happen here is if Nifty goes from 17,171, okay, to 17,271, this will approximately bring a 99 point change in the premium. Okay, and this you can almost be very sure about it, and it will bring a 98-97 point change, because there is hardly any time value in the very deep in the money strike prices. Okay, so basically to take one lot of this would hardly require you 58,000, correct? 58,333. Whereas for future it requires close to, I think, 80,000 right now, 80 to 90,000. So this becomes cheaper for you. Okay, so that is one thing. Another thing that you can do, instead of futures, trade in this. It becomes more easier. Okay, so it gives you a better ROI as well. Okay, and there is no decay thing as well, because they will have hardly any time value, so it becomes more easier for you. Okay, and your risk is also limited, because you can only lose 58,000. You cannot lose more than that. In future, you can lose as much as you'd like. Obviously, Nifty does not fall as much right now. But let's say once in a blue moon, if it falls more than 20-30% within a week or so, a COVID situation happens again. So in future, you would make the highest loss, right? But if you have a 16,000 call, you would only make 58,000 loss. Your loss is limited. Because this has a premium, right? This has a premium of 1166. So let's say even if, by God's grace, something wrong happens and this market falls by 1,000, 2,000 points. Let's say market falls by 2,000 points. Okay. It goes and closes as 15,171 by chance. So what will happen to this? This will become zero. So how much have you lost? You have lost 58,000, correct? But in futures, how much would you have lost? You would have lost 50 into 2,000, right? One lot is 50. 50 into 2,000 is 1 lakh, correct? I'm right, yeah, 1 lakh. Okay. So your risk is also limited plus better ROI. Okay, so that is how deep in the money. That has a delta close to 0.99, 0.98, 0.97 is also fine. Okay, they are really good to trade instead of futures because of limited risk and better ROI. Okay. Yeah, liquidity issue can be there sometimes, but just to tell you one more thing here as well. See, you can see this feature, right? So this is telling you which is liquid and which is not. So whichever strike price is having this symbol, right? So it is telling you that this certain strike price is illiquid. Okay, so don't trade in that. So it is telling you 16,000 is liquid, go for that. 16,100 is liquid, go for that. 16,200 is liquid, go for that. 0.97 delta is also fine. Okay, so that is how it becomes better. Okay, this was about deep in the money, one way to use delta. Okay, we'll be coming back to delta again in the strategies. Okay, how to select certain strike prices using deltas. Okay, in certain strategies, in option selling and everything. Okay, right now for option buying, one thing that we have understood is just to, instead of going for futures, right, you can do this thing, you can go deep in the money. Okay, which will bring down, see, because if you're buying at the money option, right, that is having a delta of 0.5, here your chance of making money is only 33%. Okay, whereas if you're going deep in the money, your chance of making money is close to 50%. Okay, why is this 33%? Because of time value. Okay, see, because if market remains constant, market closes at 17,171, right? This will come down to 20, the premium of this. So you are losing almost 138 rupees per lot. But if market closes at 17,171, then in this, see, this is 0.92. If you go to 0.97, let's say this one, 16,200, right? So it is showing you 969. So you will hardly lose any money. 969 if you add, that is 17,169. Okay. So right now it is showing you 17,169. It is actually less than 17,171. But you'll get this for 971 or 972. Okay. This is because of the average price closing. Okay. So you'll get it for 971, 972. So even if market closes at 17,171, you will still not make any loss, right? Your PNL will be zero. So if market goes sideways, it closes at the same price. In at the money, you'll make a big loss. But in deep in the money, you won't make any loss. Or max to max 1 point loss, 50 rupees loss per lot. Okay. So that is how your probability goes up. 50% chance to make money. At the money, 33% chance. Out the money, also 33% chance. I won't even say 33% out the money, it's even less than that. Okay, because you need a really good move. Okay. Yes, ROI is really good. The reason people go for out the money buying and at the money buying is because you get it for cheap, right? Yahan pe per lot is only 7,900. In out the money strike price per lot is 1,900. So you think that, since it is cheaper, let me go for it. But what is the probability of you making money? It's very less. Okay. So that's why it doesn't make sense. Okay, see, as I told in previous session as well, trading is a game of probability. So if you're trading, try to keep probability on your side. Because even you are bound to have bad days. But if you have probability in your side, by the end of a year, by the end of a decade, you will be in profit automatically. if you can control your risk reward. Simple. Okay. So that is one thing about option buying using delta. Okay. I'll come to option selling as well. There also we'll understand delta a little more, how to use it. Okay. See, again, it's not about volume, it's just about liquidity. Okay. And you will get liquidity. Okay. Okay, it's not in Nifty you will get. In some stocks it can be a little difficulty. Okay, but in Nifty, Bank Nifty, you will get to trade in deep in the money options. Okay, don't worry about that. You will get. Okay. थोड़ा liquidity issue हो सकता है 10-15 point का. Okay. Sometimes, but again that is not a really big issue. Okay. Because again 10-15 points is not much. Here you're losing 138 points directly. Right, there 5-10 points. Even if you're losing, it's not much to bother about it. Okay. Now the second Greek that you have after this is gamma. Okay. See, the thing about gamma is that try to understand one thing. See, right now, let's say market is at 17,200. Correct. Market is at 17,200. This is your spot price, CMP. Your strike price, let's say we are taking 17,200 itself, ATM 17,200 call. Okay. Iska premium is let's say 50. Okay. And iska delta will be close to 0.5. Okay. Now let's say after 200 points, market goes to 17,400. Okay. This is at the money right now. When the market has gone from 17,200 to 17,400, okay, premium will also go up. Okay? But when it has gone to 17,400, the market, the delta of this will change, correct? When the market moves, it goes up, ATM becomes ITM, okay? And will ITM have delta as 0.5? ITM has a delta of close to 0.8, 0.9. But again, this is slight ITM. So iska jo delta hai 17,200 call ka, this will go close to 0.7. Correct? So delta will also change. Why? Because strike price jo hai, they will change. Their moneyness will change. They will go from ATM to ITM, ATM to OTM like that. So if their moneyness is changing, their delta will change. So if delta is changing, that means it, if it is moving, right? So there is some rate of change. So for example, if Nifty goes from 17,200 to 17,201, okay, तो premium में तो change आएगा, correct? In premium there will be some change, and that change is called delta, correct? But since the market has gone from 17,200 to 17,201, your delta will also change, and that rate of change is called gamma. Okay, do you get my point? Gamma is nothing but rate of change of delta. Okay, gamma is what? Rate of change of delta. That if the underlying asset goes up by 1 point, okay, if the underlying asset goes up by 1 point, how much will be the change in the delta? That is what gamma does. Okay. Gamma is what? Rate of change of delta. Okay. And one thing that I can tell you about gamma is this is the least used Greek. Okay. This is the least used Greek out of all four. Okay. Gamma is only of use when you are doing option selling, and that too not option selling with 1 lot or 2 lots, when you are trading with 20-30 lots, 40, mostly, if your capital is close to 40-50 lakhs or 1 CR, and you are doing option selling with 50-60 lots, that is when gamma is of some use to you. Okay. Otherwise, gamma is not at all useful for rest of the things. Okay. Just to show you how to plot this, you can just go to the settings and just select the gamma here, and gamma will appear. Okay. So this is telling you 0.0011. Okay. So 0.0011 means if Nifty goes from 17,171 to 17,172, this delta will change by 0.0011. Okay, so this delta will go from 0.52 to 0.5211. Okay, that is how this delta will change. So gamma is nothing but a rate of change of delta with respect to the change in the underlying asset. Okay. So gamma is not much useful. It is only useful when you are trading with higher lots. Okay. So when I'll tell you the option selling strategies, we'll discuss gamma once again. Okay. Yeah, I'm just finishing off the session now. Okay, don't worry. I understand it's too much to take in. I think I've been talking since 1 hour, almost 1 hour 30 minutes, right? So I get it. We'll close it off here. Okay. Next session we'll start with Vega and Theta. Okay. So I think I cleared the doubts till implied volatility. Okay. Gamma, there's nothing. Okay. Still any doubts about delta gamma? I'm open to take it. Okay. Any doubts about pivots? I'll be taking it in the weekend. I'm thinking to conduct a doubt session. Okay. If I do, I'll let you know. Okay. You guys can join and ask me the pivot doubts or any doubts regarding the previous topics. Anything you can ask me in that doubt session. If not, then I'll take a session on Monday or on Tuesday about a doubt session for all the previous topics. Any doubts right now? Implied volatility I've cleared. Delta ke baare mein kuch hai, you can ask me. If not, then you can leave. Okay, you can unmute and ask right now. No class tomorrow. Tomorrow is Saturday, so it's off. But I'm planning to conduct a doubt session. If I do, I'll let you know. Okay, so it's not confirmed right now. If I do, I'll let you know.
Hey Yash.
Yeah.
Please compare India VIX chart with Nifty chart during the Russia-Ukraine war time.
Okay.
Please clear that point once again, support and resistance in India VIX.
Okay. See, what happened here was that during the Russia-Ukraine war, we saw a big fall, right? And market formed a bottom near 7th to 8th of March, right? Market formed a bottom, okay? At the same time in the VIX, if you see, on the 7th to 8th of this period, right? This is the 7th to 8th March of period, right? This 7th to 8th March, okay? So you know that this is VIX resistance, right? 30, 31, like that, okay? So you know that VIX is coming at a really good resistance from where the VIX falls, okay? So you know that VIX is forming a top. That means market will form a bottom, and that's exactly what happened. Market formed a bottom. You got a confirmation as well, a doji bullish engulfing up. Okay, so that is the correlation.
Got it. Thank you.